The World Bank has released its India Development Update, which explores where the Indian economy is going, what's the forecast for the Indian economy for this year on the growth front, on the inflation front, and what are the challenges. To help us understand all that and more, we're joined by Mr. Dhruv Sharma, who has authored this report. Thanks very much, Mr. Sharma, for joining us. I want to ask you first that just give us a glimpse of what the Indian economy outlook looks like, both on the growth front and the inflation front for this year.
Sure. Thank you for having me. Let me start with the growth forecast. Our expectation is that growth will moderate to 6.3% in this fiscal year and moderate relative to where it was last year. Having said that, we're expecting robust investment activity. We're expecting the services sector to also be robust. So that moderation comes in a context of a challenging global environment, in an environment that is still faced with elevated inflation, monetary policy around the world as well. We see rates higher than they were, a couple of years ago. So in light of all of that, the moderation is actually a result of some of the base effects that we saw over the course of last year wane away. But still robust and still expected to be one of the fastest growing economies in the world.
That's fantastic. But the last year has been particularly challenging. The last couple of years, in fact, ever since 2020. First you had the pandemic, then you had another wave, and then you had yet another wave, and then you had the Ukraine-Russia war. All these reasons have really hurt the Indian economy and the global economy at large. Do you think we have, just talking about India here, do you think we have overcome those challenges that were posed by the pandemic and then the Ukraine-Russia war? Do you think we are over the costs that these challenges posed for the Indian economy?
So over the past 10, 15 years, India's economy has developed a certain level of resilience. It is better placed than it was several years ago to weather some of the global developments that you've just mentioned. Macro stability is better than it was several years ago as well. We've seen India build up its buffers, economic buffers. It has large foreign exchange reserves. Its financial sector is healthier than it was. We are seeing FDI still, foreign direct investments still remain small, but increasing over the past few years as well. And we see policy decisions such as having an inflation targeting framework, insolvency bankruptcy code, all introduced with a view to helping India navigate some of these challenges. So all these challenges and developments that you mentioned, I think India is better placed to navigate those. And if it's a question about are we over the worst of it, look, global challenges are still they're still there, but India's better placed than it was to weather those now.
Now, one big worry that was posed after these global challenges is the possibility of a recession, a global recession that was talked about. Then the United States did enter a technical recession after slowing down of the economy for 2 consecutive quarters. So did the UK. But tell us whether that fear of a recession is over. And a lot of top economists had said that India would be immune from any such recession fear, at least for now, because as you mentioned that India was better placed compared to some other countries. So do you think those recession fears are over for now at least?
So look, we're seeing challenges in several parts of the world. We're seeing some strength in the US economy. It's still there. We're seeing some weaknesses in Europe, and we're seeing some weaknesses, of course, in China as well. So to the extent these affect India, yes, India is not completely immune, but as I said before, India is better placed to weather those. So if there is a reduction in, if growth eases in Europe, China, some of the bigger economies, we will see some effect on India. But our forecasts, our projections have taken those into account, which is why we settled on 6.3. And I'll just note that our forecasts are unchanged from where they were 6 months ago as well.
Yeah. So coming to your forecast, the growth forecast has been unchanged for the last 6 months at 6.3%. But if we talk about the inflation forecast, it was 5.2%, if my memory serves me right, 6 months ago. And now it's at 5.9%, according to the report you've released today. So the reasons behind that rise, are those the predictable vegetable price rise, which we saw over the last couple of months? Is it just that? And do you think that this higher inflation, I mean, it's we've always learned in economics that when there's high inflation, it does impact growth also because it affects your demand, it affects your consumption. But when we're expecting a 0.7 percentage point higher inflation, your growth forecast is the same. So
Sure.
are you saying that that rise in inflation is not impacting growth much?
It's a very good question. Look, when we think about India's growth, a large part of that is underpinned by, India's GDP is composed a large part by consumption. So consumption is the largest chunk, and then you have investment, and then a small part which is the external sector. So where our inflation forecasts play into growth, we're expecting some moderation in consumption. We're expecting consumption to moderate over the next fiscal year and then maybe stabilize around 6.5% growth. Overall conditions, and of course inflation is part of those overall conditions, are still quite attractive in India, and they're still conducive for growth. So that what is driving growth is really strength in investment. We've seen that strength underpinned by the government's commitment to capital expenditure, infrastructure investment. So while yes, overall our forecasts have not changed as a result of our change in inflation forecasts, the composition of what is driving growth has changed slightly. So that's where you see them.
That's interesting. And when we talk about the composition of what's driving growth, one sector that's mentioned is the service sector, which is performing fairly well. But the other sector, which is very important for any economy, especially a developing economy like India, is the manufacturing sector, because that's the labor-intensive sector where you want to create jobs. But we've seen just today, the S&P Global report came out, which said that the manufacturing PMI is at a 5-month low. And even in the GDP figures, we are seeing that the manufacturing growth is, if I can put it that way, it is struggling a bit. So would you say that? Would you agree with that? And do you think the manufacturing sector is a pain point for the economy?
So I agree that the manufacturing sector is critical. Now, the weaknesses that are being seen, perhaps in India, maybe perhaps in some of the recent numbers, are also a reflection of what is going on globally. There is a slowdown in major trading partner growth. Having said that, as you rightly pointed out, some of that has been offset by strength in the services sector. So we're seeing that again play out in the numbers. So to the extent that India's, what is going on in manufacturing is being reflected in the global cycle, that's what we're seeing play out here. It's something to watch out for, as you said, for job creation. It's an important sector, but I don't think at this stage there's anything to be very, very alarmed about.
That's good news then. But there is a lot to improve on for sure. But now I want to read out something that the World Bank came out with just a few days ago, that it cut its forecast for China's growth next year and warned that East Asia's developing economies are set to expand at one of the lowest rates in 5 decades. So that's about South Asia. Where do you think India is placed here? Where do you think India compares with its peers in terms of both growth and inflation?
So I can comment on the India part. As I said, India is still expected to be one of the fastest growing economies in the world. So to grow at 6.3 when you have significant global challenges, significant regional challenges, is something worth noting. Inflation, in many parts of the world last year, we saw very high inflation. India also had inflation numbers that were above the central bank's comfort range. We're expecting, our forecasts are for a moderation. So yes, we've got inflation coming down into the comfort range this year, and then go closer to the center of that range. So where it places India regionally and globally, strength in growth, and inflation that is expected to be well within the comfort range that the central bank has.
So India is better placed than some of its peers. Would you say that?
Yes.
Right. And one of my last questions about debt, the debt crisis was mentioned in your presentation, and also the South Asia development update. One question that's been pressing for a while now is that whether India can go the Pakistan or the Sri Lanka way. And there's been a lot to say that our macroeconomic indicators and our financials are a lot different from these countries. What would you say about that question?
So I won't comment on Sri Lanka and Pakistan, but I can tell you that, sure, India's debt to GDP ratio is higher than it was a few years ago. It reached just below 90%. It was about 87% a couple of years ago. It's now down closer to the mid 80s. We're expecting it to come down to around 82.5%. So from a sustainability perspective, we're not concerned. And while it is high, like I said, what matters here is sustainability. And more broadly speaking, we're expecting the commitment to fiscal consolidation to remain over the course of the next couple of years. We saw that commitment last year and the year before as well, and we're expecting that to remain unchanged.
So you think that the reasons that led to the economic crisis in these two countries, those reasons are not the same for India?
I think they're very different. India's a very different differently positioned in those two countries.
Right. And now I want to ask you about, when we speak about comparing India with other countries, we also have to highlight the point about income inequality, which we have highlighted. But on the other side, we also speak about how investments can drive growth and how that can have a trickle-down effect. And the report that you've presented, that talks about FDIs, and that says that while FDIs are resilient, but they're still below the pre-pandemic level. So tell us something about why you call FDIs resilient, and what do you think needs to be done from a policy point of view or from the government to get the FDIs back to a pre-pandemic level?
So it's an important point you make about how investment drives growth. And foreign direct investment, FDI, is also an important part of India's growth story. Now, the important part to note here is that they're adequately financing the current account. India's FDI as a share of GDP is relatively low, but the overall trajectory over the last several years has been upwards. So while it's while it's still below where it was a few years ago, that's largely a reflection of challenges everywhere in the global economy. Various points through last year, we saw foreign portfolio outflows, we saw capital flight, but then now coming back to the resilient part, we saw a return of capital into India relatively soon. So if you compare the volatility we saw last year to volatility in previous periods, for example, in 2013 with the taper tantrum, 2018 and other periods, in those periods, capital left India and it took a while to come back. Last year, we saw capital leave and come back relatively quickly. Again, this points to two things. It points to the buffers that India has built. It points to the macro stability being a core part of the government's economic policy focus, and it points to investor confidence in the Indian economy as well.
Right. So a lot of positives to look at, but definitely some challenges.
There are challenges there, but positives too.
Do you want to talk about some of those challenges?
I mean, the government has a policy where they've tried for many years and they're focusing on these things. I'm going to point to just two things: infrastructure investment. This is a story that we're all very familiar with, and the government's committed to that. There is some evidence that increasing investment in infrastructure actually crowds in private sector investment. So we're hoping that to see some of that over the course of the next few years. And when it comes to attracting more foreign direct investment, look, the government has done several things, including improving the business environment. There's a focus on bringing down logistics costs in India, which will, of course, make the business environment even better. So all of these things are policies that we would encourage the government to continue to do so, and not lose sight of the importance of FDI, the importance of continuing infrastructure, not only just for a couple of years, but over a large number of a longer period of time. Sorry.
Right. Thanks very much, Mr. Dhruv Sharma, for speaking to NDTV. And as has been said, but it is important to highlight here that while India is a bright spot, as the IMF has put it, there are several challenges and there are several aspects to work on for India to be able to grow better and for the Indian economic growth to be more equitable for the entire country.